Good afternoon, Corp Chairman. Today's presentation is brought to you by Morris Micromatic Consultants, LLC. My name is Lydia Reardon, and I will begin our client assessment of your corporation with a company overview. Corp, also known in the industry as Company DO9, chose to implement a broad differentiation strategy by creating a product with unique attributes and characteristics that set the company apart from its competitors. To implement this BLS, the company invested a large sum into product quality development, features development, and all marketing activities. In doing so, the company was able to charge premium prices to reflect the higher quality of their products. Currently, Company DO9 is ranked third in the industry and remains successful in implementing their BLS. By performing a break-even analysis, our team was able to provide a more critical evaluation of your company's performance in the industry. We calculated the margin of sales, MOS, by dividing the fixed cost by the sales revenue minus the cost of goods sold. The MOS tells us what % of sales the company can lose before it breaks even. The larger the MOS, the greater the cushion the company has protecting it from a loss. Company DO9 maintained a relatively high MOS throughout 8 quarters, peaking at an MOS of 0.75 in quarter 5 and ending with an MOS of 0.47 in quarter 8. Your company's MOS tells us that the company can lose almost 50% of its sales before experiencing a loss. Although a high MOS indicates the company is operating efficiently by maintaining high sales and low costs, too high of an MOS can indicate that the company is not efficiently utilizing its current assets. By taking a closer look at our findings, we will be able to see if this is true for your company.
Hi, my name is Yanchen Ye, and I'm going to talk about some findings about your company. Firstly, the broad differentiation strategy utilized by your company is easy to be imitated by other competitors, which would reduce the competitive advantage of the company. For example, the first and second place finishers in our Micromatic competition also intended to pursue the strategy of broad differentiation of quality. The risk is that these competitors achieve the greater differentiation in the same market portion. Besides, your company had success problems of stock out because the actual demands of the products were always higher than the amount of the sales forecast, which was indicated as the graph showing below. As we can see, the actual demand of the market as the red line was more than the sales prediction as to the blue line in all 3 regions. Lastly, I think your company shows awareness of the competitive industrial because you purchased some marketing research information through the first 4 quarters in the competition. According to the table below, we can discover that there were 5 marketing research has been purchased in total, which includes the industrial information of sales representatives, the product features, and product price, but you did not invest any funds to get further industrial research in the rest of the quarters. Overall, I think your company made some efforts to investigate the performance of the rest of the industrial to find out some competitive advantages for your corporation. Now let's take a look at some of our recommendations for your company.
Thank you, Yanchen. Hello, I'm Spanish Handy, and I'll be delving deeper into our recommendations for your company. As Yanchen introduced, stockouts were a frequent issue with a noticeable dip in quarter 4. As the company has stopped funding into market research in this quarter, there is suggestion that there's a correlation between the market research and decisions towards supply. This leads us into our first line of improvement strategy. Increase funding towards research on average demand for each quarter, and this will allow the company to better understand and allocate resources for production. A broad differentiation strategy relies on unique qualities that create value in the perception of the consumers. Frequent stockouts can harm brand loyalty as consumers won't trust that the company will meet their demands for supply. And the company did well on focusing on quality and consistent increase in their prices, so they were able to be seen as a high-end product, and therefore built a brand that customers deemed valuable and worthy of having the second highest cost among competitors. This pricing strategy earned the company 3rd place amongst the competition, but stockouts resulted in a loss in sales. This leads us into our next solution to implement to combat the company's stockout issue. The company held onto excess cash, which is an opportunity to reinvest into expanding the company's production capacity. This would be done in 3 different parts. First, we would fund additional plants in regions 1 and 2, and following that, we would have to hire on more workers and increase funding and training for regions 1 and 2 as well. With this higher capacity, the company will need to increase the orders for raw materials in order to meet the demand projected by market research. As your executives have suggested, this excess cash can be used to fund additional advertising projects, but our team feels that the production and stockout issues are the top priority for the company, as it is ranked 3rd behind 2 companies that are also utilizing a broad differentiation strategy for their product, and the company should focus on maintaining brand loyalty in the market. Our team feels that implementing these recommendations, the company will be better prepared to meet customer demand, decrease the occurrences of stockouts, expand the company's production capacity, and continue to build brand loyalty as a high-end and quality product. Thank you for being with us to discuss your company. We look forward to seeing your company perform in the future and move forward in the ranks.